Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtor Realty Inc. In today's video, I'm going to actually quickly explain a concept that you may not understand. That is mortgage default insurance. What is mortgage default insurance exactly? Now, mortgage default insurance, at least where I work, is colloquially referred to as mortgage insurance. We kind of take the default portion of the word out. Mortgage default insurance or mortgage insurance protects the lender from potential default from the borrower. Sounds pretty simple, right? Now, obviously, this concept exists in different countries, but where I work, for instance, Canada, it is a mandatory thing for a consumer, for you, the borrower, if you're gonna take out a mortgage, for you to have mortgage default insurance, only if you are putting down less than 20% as a down payment. Meaning if you want to buy a house and the house, hypothetically for the sake of argument, or this example rather, costs $1 million and 20% of $1 million is $200,000. If you put $200,000 or more, you do not have to take out an insured mortgage, as it's called, with a mortgage default insurance. However, if you're going to put down less than 20%, you have to have mortgage default insurance and take out an insured mortgage. Obviously, with this insurance comes a premium which the borrower has to pay, and the premium is calculated based on the amount of the mortgage loan and the size of the down payment. Anyways, that was a quick video explaining that concept. As always, please feel free to get in touch and subscribe, comment, rate, and review. And my contact information is in the description box. Thanks for watching. Ask me any questions you have, okay? Thanks.